I'm 680 News Senior Business Editor Mike Eppel. If you have a variable rate mortgage or a home equity line of credit, well, you don't have to worry about interest rates on either of those going up anytime soon. In fact, we could actually see the big banks start to lower mortgage rates in the not-too-distant future, considering what the Bank of Canada said today on interest rate policy. The central bank maintained its overnight lending rate at 1.75%, and after previously talking about the slowing signals for Canada's economy, took it one step further today and talked about the risks regarding global economic growth forecasts, and that could slow our economy that much further. So, in its policy statement, the bank said that there is increased uncertainty around the timing of future rate increases. Some think that could put the Bank of Canada on hold for interest rates for the entire year. Avery Schenfeld is the chief economist with CIBC World Markets.
The bank is finally acknowledging that there are troubles both at home and abroad in terms of what's happened to growth. So domestically, we've still had good employment growth, but they note that there were big disappointments in some of the domestic indicators of economic activity, as well as a global slowdown. And now they're conceding that even on that front, it might not be all about trade talks and more about other factors as well slowing the global situation.
Now, in reaction, the Canadian dollar hit a two-month low today. It dropped well below 75 cents U.S., and we saw bond yields tumble to two-year lows in some cases, including the benchmark 5-year Canada bond. And this is where the banks take their cues for setting mortgage rates. So we saw bank stocks today rise on Bay Street, lifting the TSX to its highest level in 5 months. And there is some talk that the banks might want to generate more mortgage business, lowering mortgage rates going forward. So we'll keep an eye on that in coming days. Now, money does flow like water to the path of least resistance. And following slowing signs on Canada's two biggest real estate markets, Toronto and Vancouver, money is going to Montreal. It is now the hottest real estate market in the land. It doesn't have any foreign buyers taxes or anything of that nature. And we've seen the Montreal housing market jump dramatically year over year, with sales up 8% for February. Condo sales up by 15% year over year. The average price of a Montreal property now $388,000, and while that's up, it's still about half of that in Toronto and well below that $1.4 million threshold in Vancouver. And Canada's canola growers have been caught in the crossfire of the dispute between China and Canada over Huawei. China confirmed today it had revoked the canola shipping license of Richardson International of Western Canada, and this dropped the price for canola dramatically to a 3-year low on international markets. Canada exports billions of dollars worth of canola products to China every year, and they cited concerns about pest infestation in the canola crop. Now, Canada's agriculture minister said there was no identification of any pests or bacteria of concern. Some think that this is retaliation from China related to the arrest and possible extradition of the Huawei chief financial officer. From the 680 newsroom, I'm Mike Eppel for City News.